Hello everyone, I'm finally back with another cruise stock video. Today I'll talk about my latest decision on these stocks and explain why I decided to do this. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Again, it's completely free for any of you that would like to join today. So as many of you may know, I started investing in cruise line stocks back in 2019, mainly because I love cruises. I love going on a cruise. I would most likely go at least on a cruise once per year. And after realizing that, I started investigating about Carnival Cruise Lines since it was the biggest one between Royal Caribbean, Carnival, and Norwegian. But I traveled more in Royal Caribbean than Carnival last year, on 2019 actually. Well, 2020 because I was on a cruise on February 2020. That was my very first video ever in this channel in December 2019. After doing my research, I decided to invest in Carnival in December 2019 when it was at around $44 per share and continue adding to my position since then until March 15th when it dropped to $11 per share. I decided to first invest in Carnival because it was the cheapest one between Royal Caribbean and Carnival, but with time Royal Caribbean started dropping a little bit more. I did some research on it and found out that, in my opinion, Royal Caribbean was better company, stronger than Carnival, and when the stock dropped to $90 per share in February, I thought it was a steal and a very fair price. The thing is that I did not take into consideration the virus that was going on in Asia since it was not still in the US. So 1 month later, I was buying Royal Caribbean at $24 per share. Between January and March 31st, Royal Caribbean dropped 75% and Carnival 82%. I bought a bit of both companies at the moment, more of Royal Caribbean than Carnival, to be able to average down my cost and be able to recover faster from my position after the virus ended. The thing is that cruises got cancelled until April 15th, then to July 24th. From July to September, things were getting worse and worse, and they extended a no-sale order from September 2020 to October, and then finally in October they issued a framework for conditional sailing order. Throughout the whole 2020, cruises company have struggled a lot and have spent almost a whole year raising capital and trying to eliminate debt by selling cruise stocks or offering bonds, for example. Still, Royal Caribbean have decided to extend suspension of sailing of their global fleet throughout May 31st, 2021, excluding sailings on board Quantum, Spectrum, Voyager, and Odyssey of the Seas. Further operations should resume in June 2021, and Carnival decided to do the same. Now let's analyze Royal Caribbean's report and then I'll explain why I decided to close my position. They announced something that we already knew, to be honest. They started limited operations. For example, in December, Quantum of the Seas started operating out of Singapore and had 3 vessels operating in the Canary Islands as well since November. Guests are sharing very positive reviews, and we are also seeing a higher proportion of first-time cruisers than expected, which in my opinion it is very good sign since it means that people are willing to go back to a cruise, and I think that the same thing will happen here in the US. Even more right now since we have the vaccine available. Since the suspensions of its global cruise operation, the company has taken aggressive actions to enhance its liquidity. During 2020, the company raised approximately $9.3 billion throughout the combination of bond issuances, common stock public offerings, and loan facilities, which is what I talked about before. Completed $1 billion at a market equity offering, amended its export credit facilities to defer $0.8 billion of principal amortization, additional $0.4 billion of principal amortization, and amended over $4.9 billion of commercial bank facilities. The company continues to estimate that its cash burn will be on average $250 to $290 million per month. As of December 31st, 2020, they had approximately $4.4 billion, including $3.7 billion in cash and cash equivalents and $0.7 billion commitments from 364-day facilities, which is still a nice liquidity even with everything they have gone through. Still, they are expecting to have a capital expenditure for 2021 of $2.1 billion, which are mainly driven by new build projects such as Odyssey of the Seas and Silver Dawn. They have also divested 3 ships of its fleet and have also announced it entered into a definite agreement to sell its Azamara brand, which was one of their luxury cruises, and I will talk more about that on the video because I did not like that a lot, but at the same time I understood why they decided to do that. Then they announced that booking activity for the second half of 2021 is aligned with the company's anticipated resumption of cruising. Pricing on these bookings is higher than 2019, both including and excluding the dilutive impact of future cruises credits, which it impresses me because it confirms the fact that with the vaccine available, people are willing to hop on a cruise faster, which makes sense because after being in a pandemic for a whole year, all of us want to just travel and travel every single day that we can. But first we gotta work, so let's continue with the video. Since the last business update, 75% of bookings made for 2021 are new and 25% are due to the credits that they offer, and as of December 2020, they had $1.8 billion in customer deposits, which 50% are related to the credits. Now, on January 19th, Royal Caribbean enters definitive agreement to sell its Azamara brand to Sycamore Partners, a private equity firm specializing in consumer, retail, and distribution investments, in an all-cash carve-out transaction of $201 million. Royal Caribbean explained that they decided to do this since it will allow them to focus on expanding its Royal Caribbean International Celebrity Cruises and Silver Sea brands. According to them, they are not doing this for the cash that they will receive, but in order to be opportunistic with their brand. They talked about this and said that they want to look back and see that they have done a nice investment in things that fit their brand, which makes me think that they were not feeling comfortable with Azamara and its luxury ships since they want to focus on their other three brands. Now, I did not like this a lot because I would think that it was because of the cash, but at the same time, I did like it because it will help them focus more on the other three brands that they mentioned. But we will have to wait and see how that turns out. I think it will be fine, since the other three brands are very, very good for them as well. They make a lot of money, or they used to make a lot of money before the pandemic, but still for 2021 they did not give much information. The company's operation is still subject to the impact of COVID-19. Consequently, the company cannot reasonably estimate its financial operational results. Notwithstanding the foregoing, the company expects to incur a net loss of both US GAAP and adjusted basis for the first quarter of 2021, which makes sense because they're planning on starting operations on July. Now, why did I decide to close my position on Royal Caribbean? To be honest, it was because I felt it reached its peak. It was not because of the money I had invested in it, because my average cost was around $53.7, since even though I started investing when it was at the high 90s. Will it go higher? Yes, it might. We never know because I don't like to time the market. It is just that cruises has suffered a lot. They say they will start operations again in July 2021, but we don't know if they decide to extend that even further. I do think that once they are able to start operations and go back to normal, they will recover, as many people have already booked cruises and many more will continue booking, and even more with the vaccine available. But I do think that it will take them time to get fully back to normal. Since March 15th, Royal Caribbean is up almost 180%, while Carnival is a little over 60% up. With this, I am not saying that 60% is a bad return. Obviously, it is a very nice return as well, but 180% is another level. Obviously, both are really high for companies that have not been able to operate for a whole year, which is really risky enough. I do think that both companies will be able to get to where the stock was before the pandemic. Royal Caribbean to $130 per share and Carnival to $50 per share, but I think it will take them time to get to where they were before the pandemic in terms of revenue, operations, and growth. Obviously, I do continue liking the cruise industry. I do think that in the long term, they will be more than fine, since if everything comes back to normal, they will be able to be very profitable as they used to be. But I just don't know if I want to wait until that happens. It did not make sense for me to hold this stock right now, since I had a nice return of almost 40% already. Will I ever invest in Royal Caribbean again? I might, yes, I might. If I see a fair value for the company, which I'm not currently seeing right now. Royal Caribbean had a revenue of $2 billion for 2020 when they used to have almost $11 billion. I'm not saying that it is bad because I know it was because of the pandemic, but I feel that it will take them time to get back to the $10 million mark. Maybe I'm wrong and they achieve that this year. Hopefully they do, to be honest, but only time will tell. I'm optimistic. Bookings are racing, but I do want to see starting operations in July, as they said. Thank you everyone for watching. watching. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.